Today we are going to see the rule of accounting. Golden rule. In our previous section, we understood the type of account. We know that accounts are mainly classified into three categories: personal account, real account, and nominal account. So, in this section, we are going to study the rule of debit and credit in each of these three accounts. So, let us start. Firstly, we discuss about personal account. Personal account is about account of a person. So, the golden rule of personal account is debit the receiver, credit the giver. Here we debit the account of a person who receives and credit the account of a person who gives. For example, cash is paid to Mohan. Here Mohan is the receiver of cash. So Mohan account should be debited. Then what should be credited? In this transaction, cash account are also included, but cash is a real account. So we must study the rule of a real account. That is what we are going to learn next. Next, real account. We know that real account are the account of asset or properties. So the golden rule of real account is debit what comes in, credit what goes out. Here we debit the name of asset or properties account that comes to a person and credit the name of asset or properties account that goes out from a person. In the previous example, cash is going out from our hand to Mohan. So the cash account should be credited. So the journal entry will be Mohan account debtor to cash account. Then we move on to the rule of third category of account, that is nominal account. The golden rule of nominal account is debit all expense and losses, credit all income and gains. Here we debit the account of all expense or losses that incurred to us and credit the account of all income or gains that getting. For example, you sell some goods for cash. Here two accounts are incurred, that are sale account and cash account. Sale is a nominal account because it is a gain or income, so it must be credited. Then cash is a real account. We get cash by sale, so it must be debited. So the journal entry will be cash account debtor to sales account. In short, here is the golden rule of account at a glance. In personal account, we debit the account of receiver and credit the account of giver. In real account, we debit what comes in and credit what goes out. In nominal account, we debit all expense or losses and credit the account of all income or gain. Next, we move on to the task section of the day. We are going to analyze and find out more journal entries with different examples. So let's go. Ram started his business with cash. Here account involved are cash account and capital account. Cash account is a real account and Ram capital account is personal account. But how it is affected? Cash is coming into the business. As per real account rule, we debit what comes in. So cash account should be debit. Then in case of Ram's capital account, Ram is giver. As per personal account rule, we credit the capital account of giver. So, the journal entry will be cash account debtor to capital account. Next, purchased furniture by cash. Here account involved are furniture account and cash account. Both are real account, but furniture is coming in and cash is going out. So, furniture account should be debit and cash account should be credit. So, the journal entry will be furniture account debtor to cash. Then, rent paid by cheque. The account affected are rent account and bank account. Rent account is a nominal account because it is an expense. So it must be debit. Bank account is personal account and the bank is giver. So it must be credit. So the journal entry will be rent account debtor to bank. Next, Manu withdrew cash for personal use. Here, account affected are Manu's drawings account and cash account. Drawings account is a representative personal account and Manu received the cash. So it would be debit. And cash account is real account. Cash is going out from the business. So it must be credit. The journal entry will be drawings account debtor to cash. Please subscribe my channel, enable the bell icon for easy study. Thanks for watching.